Right now, the crypto market is trying to confuse everyone. You, me, and everyone. You look at this. Bitcoin is down 4% for the day, and XRP is in green. I mean, that's something to think about. Now we are looking at multiple different assets across the spectrum, and you would see, okay, Bitcoin is here, but a lot of coins are trying to bounce off. You go to the altcoin market and you're looking at these other assets. So you have INJ, which was at one point like about 50, then it dropped to what, 18? Now it's at 27.85. So bounce is happening in few different assets and categories. Crypto market is still close to $2.3 trillion. We dropped from 2.7. Here we are now. So we were trying to learn from the market. Before the recent leg down, we had this thought process like sellers are still strong, right? The volume was not matching up with the price action for bulls. That's one of the reasons why we were looking for these kind of movements in the market. We were looking at the altcoins. And right now, if you do look at that same chart for the altcoins, there is something about it. And that's what is leading towards this kind of a move. Remember, on a 4-hour chart, we had this negative divergence, which we called out in the group. Now, the movement to the downside looks good. Why? You broke to the downside, retested, and got rejected. So with all that news, with all that narrative now starting to come in, different assets would have different movements in the market, but these kind of thought process is clear. Now, I wouldn't agree on the payments asset as Bitcoin. Here, there's a lot of different payment assets. Let it be XRP, XLM, HBAR, Quant, XDC, whichever you want. There's a much better options. But yes, compared to the bank transfer, this is way better. Welcome to the scientific investor family, where the normal retail guys get to learn how to become the next top 10% of this world. Let's get right into it. So before that, if you haven't smashed the like button yet, please do that for me. Now, let's look at this. The thought process of a new comprehensive stablecoin bill. So crypto assets are here to stay, and the world is not going to kick that out, or most likely they can't. They can delay this, they can put border walls, but they won't be able to hide from this technology. Now, we look forward to a lot of different things, and we can watch this is happening in front of us. So all the narrative is there, but something like this shouldn't be ignored. You need to look at the market, the news, the on-chain data, and put that under the price action. So when you see this amount of tokens are moving to an exchange, usually that's not a good signal. Maybe it's just trying to create the panic, but as of now, you don't see that. Here we are looking at the dollar. Dollar is getting a little bit of slowdown, which is good for us. Dollar was strengthening and crypto was slowing down. Right now, you have something like this, but the trend is your friend. So if it's coming back down and bouncing, that's a different story. Yes, we will get a short-term bounce there in crypto if this is to come back down to this range and bounce off. But the macro thought process is important. That's where you slowly go in and you look at this asset, which is dollar. Right now, it's kind of, kicking a lot of emerging market currencies. So when you do look at this, you're like, okay, it did break to the upside from the moving average. It is showing strength. It is on the positive side. So that's where we are looking at the crypto market. This Bitcoin, if it is to drop with what we have seen in the recent past, last 13, 14, 15 months, then this comes into the picture. The price action shows you a 21% drop here, here, here. And if that's true, then that's a possibility here too. But if we do look at this range has something in common. We've tried it once. We've tried it again here. Now, here we are trying through that. So will we be successful in tagging this range before we go back up? or we see the price, doing the ABC leg, like to the upside, and then coming back to the downside day. We don't know. But what we are trying to do is to see what the price action is still doing. Because on the macro, what matters here is that do you have a negative divergence on a monthly chart? You don't. Are you above 80 on the monthly RSI? No, not yet. Those were the signals which we were looking at. Now, at one point, it was getting so close to that 80, and I was like, whoa, 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 that doesn't look good, for sure. But then on a monthly, we have to look at this. The monthly close is going to be really important. See, last time when you got something like this on the monthly, it was not good. Agreed? Here we are showing something similar. So if we are to get that on the monthly, that wouldn't look good. Now, we zoom in and see something like this here. So the question becomes like, okay, are we doing that right in front here? Or are we doing that somewhat like after a rally, right? Then you zoom in. Okay, I want to see the breakdown of what's happening there. Right? You enter here. And you're like, okay, we don't have a negative divergence. Cool. What do we see here? So in front of you is a chart which shows you that the price action, whatever volatility we have seen, is still above the all-time highs range. Like this range, if you put it on a monthly, you will see that's the all-time highs. So we're still close to 60,000 plus in Bitcoin, which, yes, is down from 74 for sure. But when you do zoom a little bit out, not too much, a little bit, you still see the price action is still moving to the upside. If you even look at the short-term trend line, this is what you're looking at. So you're still coming back down to that trend line and to bounce back up. So that's one. Now you have another one, which we discussed in detail before, which kind of reaches the area we talked previously about, close to 58,000. Now, I was personally thinking we would actually make a new top before we come back down. Now, don't shoot me for that. Why? Let me show this to you. It was not me saying that, was the chart showing you that. It did once here. It did second time here. It did third time here. So I was expecting it to do the fourth time too, but it didn't. But the news, narrative, everything kind of pushed it down. Agreed? Now, the thought process of what the market is doing, you need to look at it like this. If you can read something from the chart and 4 out of 5 times, if it works, great. Most likely, it may not work 100% of the time. And that's how the market works. It is going to give us some surprise every now and then. Best thing is to try learning from that. Now, remember, all the other things we've talked from the bottom here, when the majority were looking weird to the downside, it was right. Now, look at this area itself. We talked about this being a possible range. And I think I've highlighted that over many, many different videos. But what I'm confused right now, being honest, is that during all those phases, when it was consolidating, you had the Bitcoin dominance starting to drop, which then led to the altcoin market running high. So there was something great on the altcoin side. So you go a little bit back, zoom a little bit out on the Bitcoin dominance chart, and you can look at this. I mean, anyone can put any arguments, but this is something you need to see directly from the chart. We have one range of rejection. We have another one here. We are right now getting really close to this. Remember 2 or 3 videos back or yesterday, we talked about 57 being a big range to look for. Look at where we came. 57. Yes, it's a wick, but we still saw the price action pushing Bitcoin dominance to that level. Last time, when you hit that resistance, it was just one candle going up. You didn't get a break, you didn't get a fake out, it was barely a touch and run, right? So now here we are getting so close to it. Most likely what would happen, because you are looking also at the trend. This was the trend. Now, if we maintain the trend, staying here in the upside territory, it would be a different story. But right now, you're below that. You broke that to the downside. You're trying to reach back onto that trend line again and again. So if you do look at this and argue like, okay, we are testing that and getting rejected, that also is valid in the market. So will we actually get a fake out here? Will we get a downside movement in the Bitcoin dominance? Right? That's a clear thought process. Now, say you don't want to look through the entire trend. Right now, what the market is making is something like this, in which your support is going like this. That's a rising wedge. Historically speaking, rising wedge end up correcting to the downside. See, we've seen these moves before in the market, where the market actually shows you an extended move like this, which ends up correcting back down. But it doesn't happen overnight, and that's a trouble because majority expect things to happen tomorrow. There's a lot of people who understand the market, who has the patience, who has the discipline. But those who are new to the market find it really hard to see that's the way how the market works, because it's not the way we want, right? Now, if you do look at the total market here, the altcoin market, excluding Ether, now we are watching that the last candle, the daily candle, we don't have a daily close yet. But as of now, you have 70% of the last candle selling volume here. You have already reached what the last candle has done, and you're still bigger in selling than the last candle, which shows here buyers are weak or sellers are strong. So this was showing buyers were weak even though the price went up. Then this was showing sellers are weak. So I'm like, whoa, that's a lot of mixed signals which the market is giving you at this point. And that's one of the primary reasons why I'm saying the level of manipulation which you're watching in front of you is going to be sky high. This, I was personally expecting this to be a small range. So we come back here and go back up. But no, it decided to plunge here, and now we're here. So will we come back up quickly and recover? If we do, that's a trend reversal, which is good. On a short term, you are coming down and you're reversing back to the upside. Fine. But the thought process is, whales don't usually like us riding the trend at the perfect range. Whales will not like you, me, and others entering at this range. They will do as much as possible to make sure we don't use such a huge opportunity and they use it. And for them to use it, they need to buy it. For them to buy it, someone should be selling. And that's what they're trying to do. They're trying to push down. Now, you zoom in. Say it's easy on the Bitcoin market right now. You zoom in. Each time there is a bounce, someone is selling. You can see that. Look at the volume. This is 4 hour. It's a little bit zoomed in, but you can see the volatility there. Along with that, look for the price action. What do you notice here in the pattern side? Short term, it's starting to show falling wedge. Falling wedges breaks to the upside around 65-70% of the time, which means if you are following the odds, now you do have something here. Great. You're at the support, you're trying to bounce off, and it's okay. Meaning compared to the selling volume, the buying volume here is like maybe 55%. But you still got decent buying movement. The bulls are still there. They're not dominating the market, but they are trying to jump out of the cave. So in this land of candlesticks, if they are getting ready to fight back, it's going to be good. Because with any micro breakout, people would be starting to look at, Bitcoin is doing something. The moment it actually breaks through 70, they'll be like, whoa, I don't want to miss this one. And that's where all of this comes in. Now, the time structure is next thing which we should be looking at. Say, for example, we saw that the recent price action here took around what? To reach back to the top, local top, it was like 65, 66 days. The bottom came in by 49 days. Okay, fine. Where the hell are we right now in this range? We're here at 44, so we're getting really, really close to that. Now let's look at the prior trend, because I believe this is important. Last time it took 200 days to do that. Here, it only took 65, 66 days. So will we be taking the same amount of time, or will we be reaching there a little bit early? If we are to follow the trend, it should be less than 65, 66 days, right? Now, you go into, for example, XRP. You're watching that the price is still volatile. You don't actually have much of a clue because right now the buying volume is there, but the price is not going up, which kind of shows if we don't do that by the end of the daily close, sellers are dominating or buyers are weak. And that's clear. But then you have to zoom a little bit out to ask yourself, like, where the hell are we? On a 3-day chart, where are we? Right? Then you have to go back on a weekly. Where the hell are we? Because right now it's following the trend. The price action is clear. Last time you had a lot of selling volume coming in. Price action showed they won. Now we don't have much of buying volume and we have a little bit of selling volume. Sellers are still there. Now we don't have a little bit of selling volume and a big red candle. That's good. That means panic is now moving out, which is cool. Say for example, you had big selling event here, a little bit of selling volume. After that, you didn't do much to the downside. So I'm expecting something similar here. The price remains choppy, does this, which is like 2-3 weeks, and then do something like this, go back up. Now, we need to see how Bitcoin does. In the same time, if we see Bitcoin moving back up, that's going to be positive. Why though? Right? That's a big question. Because you need to see the Bitcoin dominance breaking to the downside, but still, when you go on to some large caps, say Ether, and you're looking at it against Bitcoin, on a daily, you broke the support. You're now retesting that support. We need to see that being reclaimed. Because if not, now we are zooming out and saying like, okay, this can be either once in a lifetime opportunity like this. You had many wicks to the downside. You had one here, and right now you're doing that, right? The moment you go on a weekly chart, you would agree that more. If we get to see these kind of movements from few years, that has been the trend line. So if we do bounce off, say instead of taking that, we just take the standard deviation, which would be the end of these candles, wicks, and we are here. But when you follow the candle close a little bit conservatively, you reach here. So we need to see this week getting back above. Because if not, now there is a trouble. If you do break this trend to the downside, now you have some time, which was like this. You broke that to the downside and you remained there for 3 months before you started moving back to the upside. Whereas if it bounced off from there in 2 or 3 weeks, that was the start of something really big. That was the start of something really big. So we need to see that this guy here bounce back off, break the moving average. So you can follow that on a daily chart first, then you can follow it on a 3-day chart. Like, it's the easiest way to see if the trend is slowly turning in your favor. Because at the right time, if you are in the market and you're looking at the entire segment here, say ING, if you want to actually pick it up, remember at the top, close to the 50 mark, 45 mark, we were saying, guys, this is not looking good, right? Because it had negative divergence, and that was clear. Now, not all assets showed that, we have to keep in mind, but some did. And it came back down to like $18, $17, $18. Right now trading at 27. So what are the odds of this going back into the bull market, right? For me, I come onto the weekly chart. I look at this and the weekly says, no, it's in a big correction. Fine. Then I look at the trend line. I would like to see what the trend shows me. The trend is saying I'm at that range. If Bitcoin pushes me down, I'm going to drop dead. Great. Then I go to the monthly. I want to see where the hell we are. So it shows I reached around 85 on the monthly. Whoa, that for me is, it's like, I wouldn't touch this asset. As I said to you guys, around 45, 40, 50, the same thought process. That asset dropped. But what confuses me right now is just like we discussed here. Last time when that happened, this guy dropped. Before that, we had a lot of other assets running crazy to the upside. This time we didn't watch that. Now here we are on a monthly chart. On the AKT, we reached 88. On the weekly, we still don't have negative divergence. It's still at the trend line. So it's showing I may actually bounce higher and then make a negative divergence and come back down. So all of that needs to happen in like 2 weeks so that the monthly remains like this. Because if monthly is showing you this, that doesn't look good for that asset. That's a 3 candle reversal. What's it? Evening star. If you pull it up, you'll actually see. See, if you look at it, evening star candles, you'll actually see this. You can see that clearly. That's a 3 candle reversal, and you really don't want to see that. Usually that happens at the top of a cycle for that particular asset. So last time when that happened in this asset, the first reversal, big reversal, we actually started getting a lot more run-ups in different assets. Maybe it's Poloniex or some old exchange where we get to see that. So if you do look at this as a whole, you will understand what we are talking about. Now, that's just 2 assets in the market. Agreed. So even if you look at some of the meme coins, you can kind of get the feel of the market, right? You can directly pull up the long-term history, say Doge, which is like one of the oldest meme coins out here with the dogs, cats. Now you have whatever out there. If you're zooming a little bit out, say on a weekly chart, this is what you're watching. Each time, keep this in mind, each time you break through, this is something you enjoyed. Each time you break through, this is something you enjoyed. So is this going to be different this time? That's a big question to ask, because right now the market is showing you a lot of difference, in my opinion. Some of those assets which showed us the top last time for majority are showing I'm at the top. But some of them who showed us that we are about to run for a parabolic run up shows we are about to start that. I'm like, whoa, who should we trust, right? And that's where the volume matters. That's where majority of the money flow matters. That's where we are coming on to all of this and looking at this and asking, like, are we invalidating the structure? Are we still holding on to higher highs, higher lows? As of now, you are. This is just showing it as a retest of your range. So that asset showing you a negative divergence means, yeah, not to touch that asset, in my opinion. This one for me is showing this is going to be a great buy the dip opportunity in this asset if we are to repeat what we have seen across 2021, across 2017. So you get to understand one thing. The market right now has 65,000 coins plus, or 68,000. That's a lot of coins. So look through the macro patterns, and some of them which are really new, you don't have the price history. You're going with that, like, that's the risk you're taking there. Otherwise, learn from the technical side of it. And if you want these kind of knowledge at the right time before the price wicks to the downside, most of the times, you can join the SI family, where the link is given in the description below, in YouTube or in the bio on Twitter. So guys, if you received value and you haven't smashed that like button yet, I would request, please consider smashing that. I'll meet you on the next video. Bye for now.